Yeah, I just was reading, to touch on Tesla for a second. We're an investor in SpaceX also. And they just sent a Tesla car around the sun, just past the sun. I was reading the paper the other day. Just went around the sun. That's pretty cool. So there's all these things that are happening in the world that are, they're providing growth. I mean, Elon Musk was talking about how they want to set off nuclear weapons and nuclear bombs in Mars to create an atmosphere. So, I was talking to Gwen Shotwell.
Can I just ask you? Go ahead.
So I was speaking with Gwen Shotwell about a couple of weeks ago, and she is the president and COO of SpaceX. And she said that, in her opinion, the only one who has a bigger vision than Elon for SpaceX is her. And she was talking about how she expects to get to other solar systems, other galaxies. That's where she thinks to perhaps meet whoever is there.
But Ron, sometimes you make these investments and it may take a very long time to pay off. It may not pay off. In the case of Tesla, I think your cost basis is $218.74. That's just around where the stock is trading right now. This is one that you've been.
Is that exact, Bex, or is that the?
That's what.
Yes.
I'm not sure. My point is that your cost basis. Not to say that this won't eventually pay off and be a great investment for you, but to this point, it has not been. It's something that you're waiting for because maybe it's got a long lead time. How do you determine between the ones that are going to pay off and pay off quickly? How long do you have to stick around, and what do you think about the Tesla investment right now?
Well, with Tesla, there are many investments that we've made where it's been a very long incubation period that we have made, which is taken for the investment to prove out. When we invested in Vail between 1996 and 2006, we made a very modest return, 50, 60, 70% over 10 years, and then we made 7 or 8 times our money. When we invested in Wynn Resorts for 2001, we were one of the founding investors. And Steve Wynn invested $250 million, and a Japanese investor invested $250. And he told me that there will never be another investor in our company except for you, if you want to invest. And I'd like to have you as an investor. And so we invested after we studied the land that he owned and what he was planning to do. We invested $25 million. That was at $20 a share. And then when he ultimately went public, he couldn't get 12 people to sit in a room with him. And it went public at $15 or $16 a share or $13 a share. And we invested another $25 million. No, maybe we invested $50 million at 20, and then 20. And then when it came public at 13, invested $7 or $8 million, 7 or 8 million shares. And ultimately, the stock went to 150. And so it was down after we invested. It was down 2 or 3 years later. And then people would say, I don't want to invest because it's not going to be a casino for 5 or 6 or 7 years. We invested during that period. We invest all the time when businesses are growing. When Tesla's case, Tesla, when we invested in 2014, the revenues were less than $3 billion a year, $2.7 billion. This year, the revenues are going to be about $27 billion. So the company has grown 10 times in revenues since the beginning. Then they were sort of struggling and producing cars. And next year, I think they're going to do $35 or $40 billion in revenues. And I think in 2 more years, they're going to do $100 billion in revenues.
Ron, in October, well, just to run through quick numbers, you just answer these for me. In October of 2018, Tesla was your 8th largest holding. Today, it's your 13th largest holding. That's not because you've sold shares, I take it. Is that because the company's shares are less valuable or because you've invested more in other companies?
That's because we haven't sold any stock, that's because the shares in Tesla got us. So we talked about investing at $220 or $218. Mm-hmm. It went up to $380, and now it's back to $220, $225 with some self-inflicted wounds. And so we spoke about this, and I was saying that you invited me to come on when it was 380 and say take a victory lap, and I said it's way too early for a victory lap. There's no victory here, but I think that the opportunity here, there's 90 million cars a year that are sold, and our guy is now going to sell 350, 400,000 cars. Right now, you're able to expand in a time when no one else is expanding in the automobile industry. So they're able to build now in China with all the learnings that they've had in the United States. They're building for 70% less than it would cost for the same cars to build in the United States and 30% less than it would have cost to build a year ago. And so what I think is that when we started looking at Tesla 10 years ago, 12 years ago, the cost of a battery for a car was $100,000. When they went public, it was like $30,000 or $35,000. They're now somewhere a little bit over $10,000 on the way to $5,000. Then you had 200 miles that you could get in a battery. Now you can get 370 miles. Pretty soon it's going to be, this year, I think it's going to be over 400 miles. So the quality of the car has improved. The distance has improved. The opportunity has not shrunk. And in fact, the reason they have this opportunity is all these car companies have hundreds of billions of dollars invested in plants that make motors. So their business is making motors. That's what they do. They make motors. So if your competitive advantage is you make motors better than anyone else in the world, and some guy comes along and says, hey, you know what? All that stuff, all those motors you make, we don't need them anymore. Are you going to drop all the motors that you're making and go make a battery where you're 5 or 10 years behind? So Tesla has an opportunity because other people are sort of slow walking. The guys in Germany are finding their leading industry in Germany. I think that 1 out of 10 people in Germany is employed in the automobile industry, 1 out of 7, something crazy like that. And they're saying, why aren't you guys making battery cars? The reason they're not is the unions are heavily involved in the management of those companies, and all those jobs that they have in making cars will be lost. All those investments that they have are stranded investments in making. Volkswagen's going to be a competitor, but the other guys are just going slow about this. Volkswagen is really making a big effort. Other guys aren't. Oh, one more thing, that now the law in the United States and elsewhere is that they understand that when you burn gasoline, I have other ideas to talk about too, by the way. Okay. When you burn gasoline, it doesn't help the environment. Right. And so they say, okay, there's countries all around the world that are banning the production of gasoline cars. In addition to that, they're saying if you're producing, in 5 or 10 years, in addition to that, if you produce these cars, you have to get a credit by saying that you're also producing a not polluting car. The cars that Tesla has don't pollute, obviously, because they're working batteries. Tesla is now selling $800 million a year of credits, probably $1 billion this year coming up, of credits for giving their fleet to Fiat. Just for matching for free. They're getting $1 billion. And so basically a free cash flow positive, $5 billion in cash. Go ahead.
Ron,
we're joined by star investor Ron Barron. He's been a firm, longtime supporter of Tesla, which is, of course, one of the year's hottest stocks. In fact, Ron first told us about the company's potential back in 2014.
The opportunity here is not for them to do 35,000 cars on the way to 50 or 100,000. The market is for 100 million cars a year. Like maybe they could do in 8 or 10 years, they could do 1 million or 2 million cars a year, but the potential, they could do 10 million cars a year in 15 years. So the potential is enormous.
And what a ride it's been. That stock soaring more than 80% so far this year. That's right, this year. And by the way, it's only February 4th today, so you're talking about 80% gains over the last month and a few days. Tesla's market capitalization is now $140 billion. It passes names like Lockheed Martin, Union Pacific, Eli Lilly, and Costco at this point. Ron Barron is the chairman and CEO of Barron Funds, and he joins us for the hour. And Ron, it's great to see you.
Thanks for inviting me.
Let's start with the obvious, with Tesla. This is a major holding for you.
So we could do Tesla, or we could start off with a little bit about processing and get into Tesla to show you where we got it from, whatever you want to do.
Well, let's just start talking about, let's work into the processing part of this. Let's just start off talking about the ride that we have seen, let's just say, over the last month or so. What have you thought as you've watched the stock go up 80% from $400 and change to this morning looking at $836 in the pre-market?
Well, you got to remember that 2014, when we were buying our stock, about 1,000,006 shares, at an average price of $219. And as you know, since I've been on the show several times since, the stock went between 350 and 180 and 250. So it's all over. And that period of time was when this company wasn't profitable, was expanding rapidly. It was being criticized by short sellers. It was very difficult for them to get started because dealers would try to prevent them from selling cars in individual states. But now things have all come together. And but in the period of time since 2014, the stock price didn't change very much through last summer. So through last summer, our $219 stock was $230, $240. So we made 10%, 20%, 30%. At the same period of time, the company's business, we focus on business, not stock prices. The company's business had grown from $2.8 billion of annual revenues to $25 billion of annual revenues, eightfold. So the company's up eightfold, stock's up 20%, 10%. Now what's happening, this is just catch up. Now this year, Tesla is going to do somewhere around $32 billion of revenues. And I guess that they're going to do $100 billion of revenues within 4 years. And I think they have potential for $1 trillion of revenues within 10 years. So basically, you're looking at the very start of what's going to happen with Tesla. This could be one of the largest companies in the whole world.
$1 trillion in revenue in 10 years?
That's assuming you do 10 million cars. There's 90 million cars or 95 million cars that are sold, yes. And that's without the battery business. So I'm thinking that we're thinking $750 billion to $1 trillion of revenues just on the car business. Elon says that the battery business is going to be as big as the car business. In addition to that, when I'm thinking about 10 million cars a year, the last conversation he said it was 20 million cars is what he thinks he can do. And so what we're talking about is a business that right now, demand is overwhelming for the product that they're selling. And they're constrained as far as making as many cars as they could sell because they don't have enough batteries. So now there's a nice move, announcement today about Panasonic making money in the plant they have in Reno. Mm-hmm. But they need to have more batteries. So they're going to have a battery day in a few months. They're going to have all the analysts coming out and they're going to show how they're addressing the issue of where are these batteries going to come from to make all these cars that are possible to make.
You're clearly still very bullish.
Yeah,
but it's moved 80%. It's moved 80% since the beginning of the year. Just in terms of discipline in maintaining a portfolio, do you lighten up on any of that position at all? Because you think, I still have a large position, even if I sell a little and book some gains. Or no, you're holding the whole thing.
Not a share.
Not a single share.
No. And in fact, one of the portfolio managers was speaking to me yesterday, and he said, "Ron, shouldn't we sell a little bit?" I said, "I'm not selling anything. This is the very beginning of when Teslas get started."
Ron, so here's the question.
I'm hoping we get more assets so we can buy more
make
stock.
it the number one car maker in the world.
Well, I think Toyota's
about 10 million now.
A little bit more, 12 or 13 million. But a lot of those companies are. I'll deal with the competition in a moment, but go ahead.
Well, no, so that was my question. I was putting Toyota in the 10 to 12 million category. Effectively, Tesla has to become the next Toyota for the numbers to be what they are.
Yes.
And so the question is, how do you consider the competition and why you're so convinced that they will be the next Toyota, if you will?
So the question ought to be, well, how come, if it's so easy to make a car, it's so difficult to make a car, and how could Tesla possibly be successful? And how come the other automobile companies can't just crush them? Why can't they do that? And there's two big issues that the existing automobile companies, let's say they sell 90 million cars a year, and let's say it costs $5,000 of capital spending per car in order to make 90 million cars a year. So they're invested $450 or $500 billion in their existing facilities. That's making, probably 40% of that is making motors. So basically, when you're transferring from an internal combustion engine into a battery, so here you're Toyota, or you're General Motors, or you're Ford, and I come along and I say, hey, listen, we don't need to make those engines anymore. Let's use my battery. And you've already got these, $200 billion invested in engines. Are you going to really stop that? So that's one challenge for automobile companies. In fact, the automobile manufacturers in Germany were fined by the regulator saying, how come you're not moving faster on making electrification? The reason they're not, of course, they're going to obsolete all those investments they have. That's stranded assets. So number one, financially, it's very difficult because they have to invest as much in making electric cars as they're going to have to write off in motors. And where's that money coming from? That's one. Number two, the challenge is that the dealers distribute these cars all around the country, franchises, irrevocable. And the dealers make money not on selling metal, but on servicing the cars. So if you have all of a sudden a replacement, and that's all the distribution, and if you have all of a sudden a replacement of engine that has all the service requirements with a battery that doesn't have any, and you have the parts that are so few compared to thousands in a regular car, why should a dealer, when you call up your dealer and say, I'd like you to sell the electric cars instead of the gasoline engine cars, what are they going to do? They don't make their money that way. So they have to totally revamp the whole strategy.
Incentive system.
Yep.
Hey, Ron, I've got a question from Rick Reeder over at BlackRock. He's a Tesla owner and a huge fan. He actually sends his congratulations along, says that you saw this long before anybody else did. Now there are all these analysts who are kind of jumping on board with this. But as an investor, he said you should be congratulated for what you saw so early. But he does have a question. He says at today's valuation, it's going to take a long time for the cash flow to catch up. At what point do you think the valuation is too far ahead of the medium-term cash flow potential?
Well, at the last conference call, Elon noted that I'll get to that in just a moment. Elon noted that the demand for the Model Y is going to be greater than the Model S, X, and 3 together. So that's number one. So you have that big increment of demand coming on. Number two, Cybertruck, he said, is going to be in such demand they can't foresee how they can meet demand for 3 or 4 years. So that's another one. Then they have the big 16-wheeler truck. That's going to come on sometime. Then you have autonomous driving. That's going to come on sometime. Then you have the replacement of the peaker plants for utilities with these massive batteries. That's growing 100% a year. That's going to come on sometime. And then 10 years out, there's still a lot of growth coming because you're going to have these autonomous fleets of cars. And then in addition to that, you're going to have logistics business like Amazon has. So basically, it's not just the next 10 years that's going to be this phenomenal growth. You have years after that. And we're talking about a business that's growing 50% a year. So if I'm thinking that in 4 years, they're going to do 100 or 120 or 130 billion dollars of annual revenues, and say they make a 15% profit margin, operating profit, that doesn't mean they're reporting it because they're going to take money and spend it to grow faster. So we make a lot of money by investing in businesses that are building factories, that are launching satellites, that are building hotels, casinos. And so while they're building them, they're not making money from those investments. Tesla would be building factories, and that's when we're investing in it, when that's happening, and penalizing profitability. So how much is this worth? If you have $15 billion of profitability, so-called, in 4 years, why wouldn't that be worth $300 billion in 5 years, 4 years? And then on top of that, if you get out to, I forget the roofs, the solar roofs, that's another $40 or $50 billion business a year. And that's just starting as well. So there's all these increments, and the demand is growing so rapidly. He says that he's going to grow 50% a year, 50% a year for as long as the eye can see.
Do you care? They say that they are now building towards profitability. They've been profitable to this point. Do you care if they don't have profits from time to time? Do you care if it's not a straight profitability shot? Are you okay to stand by with that? Well,
he's got $6 billion in cash right now, and up from $5 billion in cash at the end of the prior quarter. He generated, after spending a lot of money, generated $1 billion of excess cash right now. This company also, it's the only growth company in the industry. When he bought the plant in California, in Fremont, it was bankrupted by General Motors and by Toyota, and it was $1 billion plant. He got it for $50 million, 50. Looked at it and said, I don't know what to do with this place. What's going to go on here? And so then they spent on it originally, and they didn't know how to make cars so well, and they spent $15,000 of capital for every car they're going to make. Right. And that investment is producing a gross profit of about $10,000 a car for a $50,000 car. In China, now they know how to do it. And in China, the factory there cost $4,000 a car for capacity. That car, that they're going to sell it for less there, maybe in the 40s instead of close to 50, but they're going to make $10,000 in profit a car. So the return on investment is amazing. And then in addition to that, the suppliers are so anxious to do business with Tesla, they give them terms. You don't have to pay for what we're giving to you for 60 days. And they, from the time they take an order,
they give them those terms, or Tesla forces those terms on them?
Well,
I'm guessing they're not offering them up.
I'm guessing they're an institution. They're trying to make money. Right. But the suppliers give them 60 days. And our guy, from the time he takes an order to the time he gets paid for it, after he sells, makes the car and delivers it, is 30 days. Right. So basically, the suppliers, he's got negative working capital in this business. So Rick, what's it going to be worth? I mean, gee, and I can't see how. Now, of course, you can see, but my idea is that in 10 years, this is going to be at least $1 trillion of revenues, and it's nowhere near ended at that point in time. There's a lot of growth opportunities from that point going forward.
The ringtone on my phone is Elon Musk saying, boring, boneheaded questions are not cool from that conference call several quarters ago, when clearly he was under a lot of duress, et cetera. There was, let's call it those times of his troubles. How's he doing?
I think he's doing really well. And now that he's profitable and generating cash flow, and employees are happier because they're making so much money because their stock price has gone up, and he's being praised instead of torn at. So I think he's doing much better. And he also sent me a note a couple of days ago, and I was telling him about my Egyptian dancing that I was learning, and he told me and I said I wasn't sure I was going to be able to do it, but he told me he had great confidence I could do it, so I did it.
Well, let me ask you a question. Have you ever doubted in the story along the way since you've been an investor?
Well, I told him originally, and I'm sure I told everyone else as well, that I wasn't sure if it was going to be successful. I gave it a good chance. Initially, I thought it was unlikely when he came public at $30 or $35 a share. Changed my mind when I realized I was wrong and the stock had gone from 30 to 80. And I was out in California with Mike Lippert, and we were visiting one of our portfolio managers. We were visiting with Elon for a couple hours, and Mike had to cut out early. And after they said, "Oh my God, Mike, at least you're smart enough to have invested in Tesla. I can't believe I didn't." And he said, "Ron, I sold it." I said, "You sold it? Are you kidding? After you just listened to what he said, you sold it?" He said, "I sold it before." And so I watched some more, and I said, "I have to own this." And I started buying at 160. So here at $30, I didn't buy. I started buying at 160, and it took me 2 years. Took us 2 years to buy, and I thought that I was going to be likely successful at that point, even though 50 car companies have failed in my lifetime. I said, this one really has a chance. They sent out a car to my house to East Hampton to drive and see if I could, Anyway, that didn't work out great, but
What'd you do? You hit something?
Did you have an accident?
No, I got into the car, and it was a prototype model, and it was hard to get into it, and I stepped on it and took off so fast. I said, well, how do I know that a truck on the highway is going to see this car? I felt like I'm in a boxcar when I was a kid. And he said, and they said, no, don't worry about this. And they showed me a picture of a 16-wheeler truck sitting on top of this car to show it's indestructible. And I said, that wasn't the picture to show me. And so I looked at, and so I wasn't convinced for a long time. And then ultimately, I said, boy, I really think this is the case.
But I mean,
just one more thing.
Okay.
And the one more thing is that I said that, whether he's successful or not, I am really glad that I've invested in this company because I'm helping. This guy's saving the earth. This guy's an unbelievable guy, brilliant guy, great businessman, and saving the planet.
Okay, you can be a philanthropist, but let's talk about...
I intended to make money.
Right, and you have. You've made a lot of money on this, but there have been so many times along the way when it was probably hard to stand by. Were there times that you had doubts since you became an investor, whether it was Solar City getting wrapped in, whether it was all of the issues that got brought up along the way, or have you just been steadfast the entire time?
The 420 private equity
well, I do talk to them regularly. And I am aware, so it's not me relying on what other people are telling me is, things I should think about. Mm-hmm. We're talking with them all the time, and to trying to understand what issues are, and not just with Elon, but with other executives at the company and with the chairwoman. And so we talk regularly, and no, I was never shaken. In fact, guys in my office said they were amazed that I was just sailing right through it. I was convinced the whole time that this was going to be a very successful venture, and I told other people I thought it would be. I was convinced it would be.
We're watching shares of Tesla this morning. Take a look at this stock because it is surging 12% this morning. This after yesterday's wild ride, closing in on $900 this morning, and we have one of the great bulls on this stock with us this morning. Ron Barron is here. I have a question for you, by the way, before we get to any other issue. At $900, if we get there, would you split this stock?
No.
No. Because, given the retail interest in this stock, you could make an argument to split it if it stays at these levels.
Well, you can make an argument that if it's retail, then what they should do is they should buy Barron Funds that owns Tesla, so they don't have to do it themselves.
That's a good advertisement.
I don't think that it's a great idea to split stocks. Buffett has never split his stock, except when it got really high, then he gave you that little
shares, right?
baby thing. I don't think it really pays to do that.
The B shares was more of a way of letting other investors who had been in another company he acquired go ahead and stay in and get out. Yeah.
Can we go back to the whole idea of just discipline in a portfolio? I mean, you said one of your portfolio managers asked you if you should lighten up. I mean, you understand the question, right? It's had such a huge run.
So, there was I want to get that.
And you're not selling anything?
No.
Even though?
No, in fact, I was hoping that our business would grow so that I can have more money to invest in Tesla. How's that?
To add even more to the position?
Yes.
Are you adding to the position now?
If I was up to me, I would, but in the way we're structured, if we have real estate and we have in emerging markets and we have international and we have small cap funds, they can't buy Tesla stock. So basically, so let me go to price for a second. That let me do process for a second and then price. The idea is that what we do is we invest for the long term in growth companies that are competitively advantaged with great people. That's what we do. Growth companies, competitively advantaged, invest for the long term, great people. And so it's a very simple process, except people can't do it. So if you talk about Amazon, very few people in 1999 would have bought Amazon and held it when the stock went down, and then the stock went up dramatically. If they had held on, they could have done it. So basically, retail people, regular people without knowledge about it, of understanding of business, how can you possibly hold on when you have a volatile stock? How could you hold on to test the stock when it goes up and down when you're a retail investor? This isn't retail. And retail people would come in and go out. But so my idea is that we don't invest in the market on, to go back in, on what's happening in the news, not on Asian flu, not on Spanish flu, not so not on impeachments, not on oil price, nothing like that. It's just strictly on fundamentals. And when you talk about holding for the long term, so two companies, Primerica and MSCI, both went public around 2008. And they both told me, both executives, both companies, they said, Ron, you enabled us to go public. I am forever indebted to you. Primerica said that. The stock was $20 at the time, spinning out. It's now $125. We bought stock at the originally, held on every single share. Next thing, MSCI. And this is, I'm getting to the, can I go? Or?
Yep, no, go ahead.
MSCI, Henry Fernandez. I've had him on with me in 2008. Stock was $15 a share. Had him on last year. Here's an immigrant, comes from Venezuela. I don't remember which country, one of those countries, coup, they had to flee the country to stay alive, comes to America penniless. He comes up with the idea of MSCI, Morgan Stanley, brings it public. We invest in it, and $15 a share in 2008. It's now $300. And we have never, so he asked me to speak to his board last week, and he wanted to understand how is it possible that everyone was buying and selling his stock and they had a speed bump when they did the risk management? How was it possible, Ron, that you invested this whole time and never sold a share? And he said that what he wanted to do was have me speak to his board to have them, so I could explain to them, how did we withstand pressure to sell? How did we do that? And I think there's another triple or quadruple coming in this one.
So what's the answer, though? I mean, we're just trying to get to the...
So he said the answer was that he thought that I believed in him.
Right.
And then in addition to that, I really liked the business. And so after I did this presentation to their board, they were 20, 25 people. Then afterwards, it turned out that the former president of Fidelity Management was sitting in this meeting. And so he walks out with me to the elevator and he says, Ron, you're friends with Peter Lynch and Will Danoff. And did Will ever tell you the story about what he tells analysts that he inaugurated an initiation to Fidelity? I said, no. He said, well, first thing he does, he puts them all in a room, and then he puts a telephone with a speaker on it, and he calls his mother. His mother is in Alabama or Arkansas, wherever she is, and he calls her and says, Mom, what did you always, on the speaker, and all the analysts are sitting around and said, Mom, what did you always tell me when I was young? And she says, Will, I always told you that people know the price of everything, they know the value of nothing. And so basically, that's the whole idea here. That the idea is that, of course, anyone can see the price of the stock, but you can't tell me, the regular person, that this Tesla stock is going to go up 10 times or 20 times from here in the next 10 years. Okay,
I have a couple questions for you, and we're going to go fast with them. One, Elon Musk's compensation. So he's making, he captures 1% of the company for every $50 billion of the company that he moves in terms of the market share. Are you happy with that?
Well,
find that acceptable?
Of course, I found it acceptable because I voted for it. But if you think about it, he didn't work for any salary at all for the past 3 or 4 or 5 years. And so if he makes our shareholders a lot of money, then he's entitled to a lot of money. How much is he entitled to? The board decides that, and the shareholders vote on it. And so I voted for it, so I obviously thought it was okay.
Okay. Elon Musk says on the conference call just recently that he thinks that retail investors understand this company better than institutional investors. You spent a lot of time with both. Is he right? And if so, why?
Peter Lynch would say that people, when they go into a mall, 30 or 40 years ago, when they go to a Gap store, they understand that that was an interesting investment. And I think the same thing with retail people. My grandchildren, one guy is 5, one guy is 7, and my 7-year-old, a couple years ago, says to me, Grandpa, that those cars, they're very bad for the environment. Tesla is good for the environment, even children. Tesla's built their whole business, no advertising. You watch on, see, a brand, everybody knows the name Tesla. Isn't that amazing? That you built a business with not a dime spent?
The stock was up 20% yesterday. It's up 12.5% this morning. That's $100 this morning in the pre-market, which maybe you're right. Maybe it's a lot of people just figuring it out. But at some point, do you worry about momentum moves?
Well, I think about it, and I think I'm responsible for other people's money. I'm the biggest shareholder in our mutual funds.
Right.
And so, on the other hand, yeah, I think about it.
Let me ask you
but I do think we're going to make 10 times from here in the next 10 years.
You said something before the commercial break, by the way, that some people on Twitter seem to pick up, which is you said, look, even if this didn't work, I was happy investing in the company because I thought that Elon Musk was doing the right thing for the world, right? Climate, all of these other issues that I know you support.
Yep.
There are some people who would look at that statement and say, but you're a fiduciary for my money. You shouldn't be investing based on whether you think this is good for the world or good for the future. Look, I always say investing in Elon Musk is like, or betting against him is like betting against humanity. You want the guy to succeed. I get that. But the question is, when you thought about this investment, I assume, or I hope you did this strictly on the financials.
I did it on the financials. I felt I had no downside. And no downside, even if they weren't very successful, is that they were going to be the leader in this business, and they could be acquired. I thought there was no downside.
Right. Okay, let me ask you.
I thought the worst case, we would double our money.
Okay, let me ask you a separate question. Given how bullish you are on the company, given that Elon Musk tried to take this company private at $420, some people at that time thought that was crazy. Do you think that he was trying to rob the shareholders?
I think he was really discouraged. If you work the hours that he works, and are under the stress that he was under, and he was being attacked relentlessly by embedded interests who wanted him to fail. And so if you're in business and all of a sudden the oil companies will be impacted negatively by what you do, and the car dealers are negatively impacted by what you do, and the OEMs are negatively, and the short sellers are negative. So all those guys are up against him, and this guy is standing alone. Wouldn't you be upset about the way people are treating you? If you're doing something that you think is great for the world and everyone attacks you every day, why would you think that's acceptable? And so in fact, I thought this was a really bad idea. I thought he would be better off if he remained a public company. But if he went private, I was interested in participating as a investor to allow other investors to be able to continue to hold their investment position in Tesla. And I was being considered as an entity. But I recommended against doing that, but that would have been beneficial if I was chosen to be the person who had the ability for individuals to continue to invest even though it was a private company.
Joe?
Yeah. So, Ron, your record it just speaks for itself, obviously. But I was thinking about it,
Thank you.
When I was a stockbroker for 10 years, you do learn something. You learn about when you actually make an investment, you have to 6 months or a year or 2 years, you're in there. You have to look back and you actually have a position where I don't think the media, that doesn't normally happen with people that are just covering it. So the point I was going to make was, as hard as it is to buy when there's blood on the streets, and it is really hard to do that, I think and so you should do the opposite of what you're feeling. How about when you got a stock that you bought at 30 that's at 400 or at 60, and then at 90, and then at 120? How about the old saying, Ron, no one ever went broke taking a profit? Sometimes it's just as hard to hang on or to buy more of something that's already tripled. That's the opposite of doing what the obvious thing is to do again. And I don't think anyone has done that better than you. You probably aren't going to sell your Tesla even though it's over 900, are you?
I would like to be able to get more money to buy more Tesla, actually. I think that what's going to happen in that stock is that when people were selling it short for the past 10 years, and the stock quadrupled, by the way, but for the first 9 years, it didn't change so much. It'd go up and go down. But there was a good reason why people were selling it short. The reason was that it's very, very hard to start a car company, almost impossible. So you wouldn't dream that it would be possible to go out there and hire 50,000 employees and design cars and raise the capital that you need and have a brand that everyone knows, Tesla brand. My grandchildren, who are 6 and 8 years old, they know the Tesla brand. So basically, how is that? And they haven't spent a dime on advertising. How can you get a battery? They couldn't get batteries to go more than 100 miles on a charge before Tesla comes along, and now it's 400 miles, and it will be way more than that ultimately, and at a reasonable cost. So when we started off, I guess a few years before, it cost $100,000 for a battery. And then it could go a reasonable distance, 200 miles. And then it cost $30,000. Now it's less than 10, probably it's close to 5 before very long. And the cost of an internal combustion engine is $5,000 or $6,000 or $7,000. And a lot of places are going to ban them. There won't be any cars. But people didn't believe. And the only way you could possibly believe and to possibly come up with a good opinion is to go do the research yourself. You can't rely on other people telling you what to buy or what to sell. When you talk about not ever going broke by taking a profit, of course you don't go broke if you take a profit. On the other hand, you never get rich taking a profit either, because a good portion of what you realize you have to pay in taxes. So, and then you got to find something else that you like as well as what you already own and you know very well. So why would you do that?
Ron, what happens?
And so my thinking.
What happens to those other billionaires you were talking about that have made $1 billion and then seem to fall back into the trap that sort of novice investors sometimes fall in? What do you think really? Why haven't you ever gotten to that point where you decide, all right, I'm going to because it does seem to happen a lot, and you do sound smart when you're negative for some reason.
Well, so why haven't I? Of course I have. I didn't start off to be a long-term investor. I became a long-term investor because of the disastrous mistakes I made by selling stocks early or by not buying stocks. The biggest mistake I ever made was in 1999. I would go visit Jeff Bezos. I visited 2 or 3 times in a year. 2 or 3 times I visited him, trying to convince him, and I talked to him on the phone every month, trying to get him to purchase Sotheby's. So we bought Sotheby's at $20 a share, went to $40 a share because I thought you could take what they were doing to the internet. And I was trying to convince him that that was a good thing for him to own. He didn't buy that idea. And the stock, when the chairman of the company was indicted for price fixing with Christie's, went to prison, and the stock went from $40 Sotheby's to $10 where he sold it. So we lost half of our money. And I always thought that was the biggest mistake I ever made. The biggest mistake I ever made was seeing Jeff Bezos for a year up close and personal and not investing in it. How could I miss that? And Netflix. And so Netflix, we were investor in that when the market cap was $2 billion. It's now what, 200 billion? I don't know. And I didn't invest. Fortunately for me, some other guys in our office invested, but I didn't. And I became friendly with Reed. And when one opportunity that I had, the stock fell 30 or 40%. And I wasn't owning it. I sold early. I had made my 30 or 40% and sold. And now the stock had gone a multiple of what I paid for it. And then it fell sharply because it had a pricing issue. And when they made that, then Reed called and said, Ron, this is your time. And I didn't even do that. And the stock went up who knows how much afterwards. And so I learned not to miss these things. And when I have something like a Tesla, I told you a long time ago that I thought that we would make 20 times our money in Tesla. So far, we've made 4 times. I now think we're going to make double or triple again over the next 5 years, and double or triple again over the next 5 years. I think there's 10 times more to go in Tesla before I have to even think about this, if we're right. And SpaceX. So we've just been investing. SpaceX is a private company. We've invested 180. We invested 100 130 million, I think, 125, 130. It's now worth about 180. I think we're going to make 20 times in SpaceX, over the next 10 years. That is an amazing opportunity as well. There was just something where you saw this rocket, first time private citizens have ever made a rocket go into space, launch it. This is government business. This isn't the private company. And we did it. So how did he do it? He did it because he figured out that the rockets that you send up are normally a couple or $300 million. That's what they cost, and they throw them away. The fuel cost to get them into space is $200,000, $300,000, and you throw away a rocket for $200 or $300 million. That's crazy. And so what Elon says is that, so I'll call him Elon instead of Elon Musk or instead of Mr. Musk. And what he said was, gee, why are we throwing away these rockets? Why don't we use them over and over again? This ship that we just saw go into space, that was something that had been used already 5 times. Got 5 more uses to come out of that one. The next rocket that we're going to be building, that SpaceX is going to be building, will be used, over and over and over again. So instead of doing it for hundreds of millions, they did it this time for 50 or 60. I don't remember exactly what. And the next one's going to be very, very small. So their innovation was sending a rocket up and bringing it back down and landing it just like they did in Star Wars. You land on the tail end, and it's like dropping, other people said, it's like dropping a pencil and expecting it to land on the eraser and stand up still. So first couple times they tried it, didn't work, then they got it to work. And so that gives them a huge competitive advantage. Now the opportunity that they have is that they will have these satellites that they're launching now, thousands, tens of thousands of satellites, and they're going to give you internet communications from satellites. It's going to start this fall. And the opportunity they have, instead of a satellite that costs $50 million, $100 million, or something less than that, our guy can have very, very inexpensive satellites, a lot of them, and they're going to be able, because of that, going to be able to have them last for some shorter period of time and keep replacing them and keep having, up-to-date technology in these satellites all the time and have an enormously profitable business in SpaceX. There's one point I want to also make, that Elon went to Russia 19 years ago because he had these ideas about getting to Mars and getting into space again, and he wanted to buy a rocket from the Russians. And ultimately, after negotiating, they said, no, we're not going to sell you one. And he said, at the end of the day, with his scientists visiting him, he says, it's all right. I think we can do this ourselves. And then they said to him, what are you going to do with a slingshot? And then afterwards, they launched this rocket, and they got the capsule to the space station. At 17,500 miles an hour in space, it autonomously connected with the space station. And so afterwards, he's on a program, is being interviewed, and he says, so how'd you like that slingshot? And the reason for that was a reference to what the Russians had told him 19 years ago, you're going to get up there on a slingshot? And so that, he did.